Hi guys, this is Vladi from AMZ Control. I'd like to show you how to account for the cost of the returns correctly, returns and refunds, and how we do it fully automatically in AMZ Control. So let me show you my screen. So let's just explore the anatomy of the order and the way the profit is calculated when an order comes in. So normally a customer pays a certain amount of money to Amazon. And if they're not a Prime customer, then they might have to pay for the shipping explicitly. So what Amazon does, first of all, is they subtract the shipping from the amount of money that the customer paid to Amazon, and they call it shipping chargeback. So basically, it's always exactly the same amount as the customer paid for the shipping, except for VAT if you are in Europe. But let's omit it for now, and it doesn't really, matter for the profit. But I would like to show you here all the parts of the calculation. So the next thing they subtract is the referral fee, for example, 15%, depending on category. And of course, the FBA fee for shipping the product from the Amazon warehouse to the customer. Now, the next thing we need to subtract, or the sellers need to subtract, are the cost of goods. Of course, you bought the item for some price, so you need to minus it from the result, and then you're left with the profit, and hopefully it's positive. Of course, we don't have PPCs here, but let's just ignore them for now. So now imagine this happens in May, and end of the month, you kind of calculate your status and your profits, and you're left with some profit for May. And then in the next month, for example, 2 weeks later after the purchase, the customer returns the item, so in June. So what happens then is, in the very first moment, Amazon refunds the whole sum back to the customer, regardless of whether they sent the item or no. So the moment they claim the return in their user account in Amazon, Amazon immediately gives them back all the money. But they also, in fact, charge the seller. So there's something called a refund commission. So when a customer initiates a refund, Amazon will process the refund for you if you're an FBA seller. So they charge you a commission for that. And then on top of that, they start reimbursing you. So giving some of the fees back, which is really fair from Amazon. So for example, this shipping charge back, it was a negative position here. And if a refund is initiated, then they give it back to you. So this is a plus. And then the next thing that the sellers are getting back from Amazon in case of refund is the referral fee. So yeah, you paid 15% when you sold an item. When an item is returned, you get it back from Amazon. This is very nice of them. And the next thing is cost of goods, but this one is in fact optional. So two things might happen. An item might be broken by the customer when it arrives in the warehouse, or an item might be sellable. So Amazon actually tracks or identifies whether the item is sellable or no. And if it is sellable, then they book it onto your stock so you can sell it again. If it's not sellable, then this little bar you actually need to ignore. And basically, after all these additions, you're left with a loss because a refund means a loss. And yeah, as I said, if the product is not sellable, then the loss will be even bigger. Actually, it will be even bigger than this bar with the cost of goods, because you will need to dispose the item, the broken item, and this also costs money. Okay, and in fact, this loss is bigger than the profit, because some of these fees you never get reimbursed. For example, the FBA fee. So you paid it when the item was sold and you do not get it back. Or this refund commission you also don't get back. And of course, the cost of goods if the item is broken. And what's also interesting, what most sellers forget to do is, when you make a sale, then you have a profit and you already account for this profit. So you say like, okay, look it up in the Seller Center and say, okay, I sold 10 items. So if my profit per item is roughly, I don't know, maybe $3, then it's $30 profit. And then when you get a refund, it's actually not shown on this view, which shows you the orders per date in the Seller Central. So what you need to do is you should actually go back in time and kind of cancel one of the sales, but you don't do that in bookkeeping. What you do instead is you book a loss in the next month or in the next period, when in whatever period the return came in. So this leaves us with a pretty big loss. You can see here that it's actually way bigger than the profit, and we have a lucky situation here that the good is sellable. So if it wouldn't be sellable, then it would be even bigger. So now let me show you how we account for this situation, or how we can take the situation into account in AMZ control. So I'm in the dashboard here in the chart view, and let me configure the chart so that I can see my refund cost in comparison with my net profit by month. Okay, so you can see this is my profit, and the green one, the green bar, are the refund costs. And you can see that actually we had months like this one, February, where the refund costs were pretty big. Maybe it was because of Christmas, because people started sending back the Christmas gifts. I don't know exactly, but let's see what happens here. So if you click on this position, you can see details on the right. In fact, all kinds of expenses and fees associated with this period that you just selected. But we are interested in this refund costs. And by the way, see, we show that refunds costed you $532.53 at a net profit of about $1,400. So it's almost 1/3 of the whole profit. Guys, do not neglect returns. So basically here, you see the whole situation that I just described on the slide, but with numbers. So this is the amount of money that Amazon immediately reimbursed to the customers. And this is the amount of shipping that was reimbursed. So basically, they reimbursed the product, and they gave the shipping back to the customer. So shipping and shipping chargeback always have roughly the same order of magnitude, and they are slightly different because of the shift in the period when a purchase was made and the refund was initiated. So here you see this refund commission. Basically, this is what Amazon charges us for sending the goods back to Amazon. And you see a positive position here, which is the commission. You don't see any FBA fees because FBA fees were subtracted when the items were sold. But you do see a positive position, which is the product cost. And this means that during this period of time, February, some of the products arrived back in the Amazon warehouse and they were sellable. So in fact, we have two policies in AMZ control, which you can configure in the settings. An optimistic and a pessimistic policy. An optimistic policy means the moment the user initiates a refund, we assume that the item is sellable again, and basically we book the product cost or the cost of goods as a positive amount, exactly in the moment where the refund was initiated. And of course, when the item comes back to the warehouse, we automatically check whether the item is actually sellable or no. And if it's not sellable, then we will correct this. So we will subtract the cost of goods again. And the negative or the pessimistic policy is we basically assume that the item is broken. When the user initiates a refund, we assume that it's not sellable anymore. And the moment it arrives, we check again, is it really not sellable or is it sellable? And if it is, then you get a little bonus under this position, product cost. So I hope that was clear, and please feel free to write us. Just drop us a mail to support@amzcontrol.com or use the little chat box if you have any questions. We'll be happy to help. Thanks for watching. See you next time. Bye-bye.